So on the USDJPY, let's run through the daily time frame. Remember, the USDJPY was the most profitable trade for us last week's trading session, as we were able to ride the move all the way from the 131.00 level into the 135.00 area, where we had our TP target last week. So in fact, we were able to scoop over 800 pips on the USDJPY within this range here, as we had multiple entries at each breakout of structures. Now that we are going into the new week, we want to be having a fresh new look at this current structure. But in order to understand how this market is evolving right now, it's important that I refresh our memories on the USDJPY. And in order to do that, I want to be zooming out a little bit and go as far as the last 2 years here to see what has really been going on in this market. Now, if we look at what has been happening here since the year 2020, you will notice that price action had been very, very bullish, and as a result of this, I had a bullish trend identified here, as price action has continued to find higher highs and higher lows. Now, things got a little bit interesting during the month of April of last year, as we saw that as soon as price climbed above the 127.00 level, we begin to see some consolidation phase around this area to further emphasize the indecision in that market at that particular point in time. And this lasted about, I think, 2 months before we witnessed the breakout of that structure. And since the breakout of the 131.00 level happened, we saw how the bullish momentum was so strong. We saw a retest of structure, and in fact, price action moved over 2,000 pips in that direction before we started witnessing selling pressure during the month of October. And as a result of that, price crashed back again into that channel here. Remember, the channel we identified in the month of April stroke the month of June, price action fed into that channel. And remember, we didn't trade the USDJPY for like 2 weeks until a couple of weeks ago. And the reason why we didn't trade it then was because we wanted the reversal, the consolidation phase here to mature. And one thing we saw here at the beginning of the month was that price action appeared to have evolved into a reversal pattern within this channel here in the form of a double bottom structure. And whenever we identify a double bottom structure like this, the next thing we want to be doing is to identify a neckline for that structure, which falls around the 131.00 area. As you can see here, very important structure that has been a major determinant of price action, at least in the last 10 months. And we had a neckline around that area, and for this reversal pattern to be mature, we need a breakout retest of the structure to confirm that we have a mature reversal pattern. And this is exactly what happened in the last 2 weeks here. We saw the breakout, we saw retest. In fact, we had multiple rejection of the 131 throughout the course of 2 weeks ago before we enjoyed this bullish momentum to the upside last week. Now we have a situation right now where price is back into a key structure at the 135.00 area. And if you go to as far back as the month of December, you will see how this level also has been a major determinant of price action. It was initially a buy niche before we saw the breakdown here during the later part of the month of December. And since the breakdown of the structure happened, price had continued to trade below the 135.00 level to emphasize the strength of the sellers around this zone. And what makes the 135.00 level more interesting here is the fact that it also shares a confluence with that bearish trend line that we identified here. So the bearish trend line started in the month of October. So this is where that bearish momentum started. We saw a test of that bearish trend line, and when we connect the series of lower highs here, we had this resultant bearish trend line, which I said shares a beautiful confluence with the 135.00 area. Now, the question that we are going to be asking ourselves as we head into the new week is, how is price action going to be reacting to this key structure that we have here? So we have a trend line there. We have a 135.00 level, which has been a strong selling niche in the past. And if we take into consideration the fact that this area has been a strong selling niche, coupled with the fact that we are around the bearish trend line, the first thing that will come to mind is to be thinking of selling the USDJPY. Now, to sell the USDJPY at this point, there are a few things we will need to look out for. Something like a reversal pattern around this area, probably a double top structure, a head and shoulder pattern, or if a rising wedge, whatever it is, in form of a reversal pattern, breakdown retest on our lower time frame, then we could be thinking of selling at this point. But another thing I would like us to note at this point is the fact that, remember, we have a strong demand zone around this area, where a breakout of the 131 level is a beautiful sign that buyers are still very strong in this market. And if we go to as far back as the month of June last year, we saw what happened after price action broke out of the 131 level. We saw bullish momentum spring in from that area. The same thing also happened here in the month of August, where we saw a retest of that structure, inciting another bearish bullish move. And look at what has happened here in the last couple of weeks. We've been witnessing buy pressure around that area, so we need to be very careful at this point, as the confluence we have here might also witness a situation where price will be breaking out of the 135.00 level, taking out all the sell position around this area, bringing some liquidity for buyers, which will be reflected on the chart as buy pressure on our lower time frame, after which an opportunity to trade and buy the USDJPY could come in above that structure. So at this point in time, there are two things that could happen here. We could see selling pressure coming in from that below that structure, and at the same time we could see a breakout of that structure to incite a bullish momentum. Now, to decide and know what is going to be happening this week, we need to scale down to a much lower time frame so we can monitor how participants in this market will be reacting to this current level here to decide what our next line of action will be. Now, scaling down to a much lower time frame, should we go to as far back as the 4 hours time frame first of all before we go into the daily to the 1 hour time frame? So this is the 4 hours time frame here, and one thing we observe, let me just zoom into the current structure here. And if we look at the current structure here, last week's trading session, we saw our price action hit our TP target at the 135.00 level. We saw selling pressure resume around that area, and in fact, since midweek last week, price action was caught within this channel around the 135.00 level and the 133.800. And if we go to as far back as a couple of weeks ago here, we have this bullish trend line figured out after connecting the series of higher lows. So that's the major bullish trend line, and last week we saw a deviation from that major bullish trend line, which resulted in this bullish trend line that you saw here. So throughout the course of last week's trading session, we saw a situation where price has continued to respect this bullish trend line. But what we noticed during the later part of last week was the fact that price appeared to have broken down that bullish trend line, which is a good sign that the trend line may no longer have the capacity to continue to hold bullish momentum. And coupled with the selling pressure here, with the breakdown of the structure, we might likely be seeing a retracement of this bullish move that happened last week. And if that is going to be the case here, we might likely see a situation where selling pressure resumes below the structure, bringing price back into this major bullish trend line which we identified earlier. And at this point, that trend line also shares a beautiful confluence with the 133.00 level, a level which has been holding strong selling niche in the past before a breakout of that structure happened last week. So this will be a very critical point to monitor how price action will be reacting to this level to decide if we are going to be adding more position to our sell trade if price action breaks down the structure to the downside. And if the contrary happens, that is, buy pressure resumes above this level, then we shall be getting ready for another wave of bullish momentum at this point. So this is what we are going to be looking forward to. But in order to know if the selling momentum will become valid, we need to understand and see how participants in this market will be reacting to this current structure to know what our next line of action will be. And to do that, we want to be scaling down to the 1 hour time frame. And when we scale down to the 1 hour time frame, this is what I was able to identify at the beginning of the week. So the week started on a bullish note here as we saw price action resume this new week at the 134.150 level, which I've identified as the support level for this week, and we saw the bullish momentum climb up. But as soon as price tested the 134.500 level, we saw selling pressure resume around that area, bringing price back into the 134.150 level. And one thing about the 134.150 level here is the fact that since last week Friday, we have been witnessing buy pressure from that level, and the same thing has been happening here since the early hours of today. As soon as price got into the 134.150, we have been seeing buy pressure resume from that area. But now that we have an engulfing candle breaking above that structure, we can see that buyers are still finding it very, very difficult to push to the upside from this level. So as a result of this, we are going to be position ourselves for any buying opportunity right above the 134.500 level, where a buy stop will be most suitable at this point in time, and with the hopes that price will continue to climb up to break out of the 135.00 level, where that will be welcoming additional positions here. But if that does not happen and instead price action breaks down the 134.150 level here, taking out all the buy position around the structure, we might likely be getting ready to join that sell momentum back into that bullish trend line that shares a confluence with the 133.00 level we identified earlier. So what we are going to be looking out for selling opportunities here is to see price action take out the buy positions here, followed by selling pressure below the structure in our lower time frame. Then we could join that decline to the downside, and if a further breakdown of the 133.800 level happens, we want to be adding more position to our existing trade. So these are my views here on the USDJPY for today. Let's continue to monitor price action so that we can be part of that trading opportunity if either a breakdown of the sell of the demand zone here happens. So we are looking for selling opportunities below the structure, and we are looking out for buying opportunity above the structure. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section